I go in my truck every day, and instead of seeing the song title on XM radio, it tells me call 188 John personal injury, right? The lawsuits nowadays, the ambulance chasers, the billboards, the marketing for litigation, it's blown up everything. So your old settlements that were 7 to 12 grand for when your employee bumped into Mr. or Mrs. Williams, that 8 grand now is 80. It's literally 80.
Welcome to the Roots of Success, the premier landscapers podcast that brings you the latest tips and strategies for successful landscape business. I'm Jim Callai, one of the principals and coaches of McFarland Stanford. Jason New and I started McFarland Stanford to coach landscape businesses after years in the industry ourselves. Now, more than 10 years since we began, McFarland has a deep bench of coaches and subject matter experts who work with our clients on very specific issues of business. Whether you're struggling with people, profits, or just day-to-day challenges, our coaches and guests have the real-world experience and practical advice to help you build a thriving and profitable landscape business.
Hey, good afternoon. This is Chris Psencik with McFarland Stanford. I am very excited that you're going to join us today for another Roots of Success podcast. This afternoon, we have Chase and Cal from Sage Insurance and Risk Advisors with us today. Chase, Cal, welcome.
Thank you. Happy to be with you.
Excited to have you guys here with us today. So as everybody knows, and for those who don't know that aren't not part of our peer groups, Chase and Cal are some of our ACE Advantage partners. So we are very excited to get to visit with them every year throughout the year. I know they do a lot of work with our ACE Peer Group Network. And so we're excited to share some insights today with our ACE Peer Group members and our listening audience at large. I know we've got a lot of great stuff we're going to cover today, and we're going to hit a variety of different fun topics and things as we move along. And I think my main goal as we go through this conversation is really to get some tips and tricks, some things that our listening audience can be thinking about, be considering, good questions that they can be asking themselves to make sure that they're set up for success. You guys do a great deal of consulting with our partners and our ACE members on how they can make sure that they're really looking at the numbers and making sure they're successful as teams and organizations. And I'd love to just start with kind of the state of the insurance market and how we wrapped up 2025 by first saying, what originally drew you to the green industry? When we met, I know you were working with one of our ACE members and we developed a relationship through them. But what was it you found about the green industry and the service industry that really turned your eyes onto what you could do to help these business owners be successful?
Yeah, great question. At a young age in this industry, I told you my mentor was in the green space. And so I quickly adapted to, landscape, tree work, arborist, you name it. And that's what I started prospecting at a young age. And what I realized was landscape business owners, companies, they were the most fun compared to other trades just because the outside work, just the whole mantra of these are real blue-collared workers. It's not your white-collars that's just boring stuff. And so quickly, I also, when I got into this field, I understood 80% of them are misadvised when it comes to insurance. I was like, gosh, these guys need the most help. So my passion quickly went towards landscape, and man, it took off. As soon as I adapted to everything that goes into landscape operations and all the ins and outs of what makes a good insurance advisor for this field, and I just fell in love.
Yeah, I know. It's one of the things, it's always what I've been attracted to in landscaping is we're solving real world problems with a customer that wants to see solutions. And we have the opportunity to move that needle very quickly. And I know when we first met, I know I had expressed to you the challenge we saw with all of our ACE peer group members was like, man, when you look at a P&L, the amount of money that is spent on insurance, it's going to be one of the top 10 to 15 line items on your P&L every single year. And so I know as we're coaching landscape professionals, we're always looking at how you manage a business by the line item. And it didn't take long to figure out like, hey, this is one we've got to solve for our ACE members. And this is one we've got to solve for the landscape green industry as a whole. And I know through working with you guys, we have done a tremendous job of addressing these questions and concern. And so I'd love if you just share a little bit from your perspective, what were some of the biggest insurance risks and some of the biggest trends you saw that landscape companies were having to deal with in 2025?
Yeah, so we're both going to answer the same exact thing. And any of you that are in the ACE peer groups have heard me. I mean, this probably gets annoying. Auto, your fleet, auto, literally auto. I could say it 10 times. You guys on average in the landscape industry pay about 2.5% of revenue on insurance premiums annually. Of that 2.5%, I would tell you 70% is auto driven. So if you're a $10 million company, you're spending upwards of $200,000 a year on auto. It keeps getting worse. Some states are unaffected. A lot of them are affected. We've got guys paying $5,000 a truck for full insurance, and then in some states it's $1,500, but quickly escalating. Auto, all you can do to protect your fleet is what matters right now in insurance.
If I'm a business owner and I'm seeing my auto per vehicle is $2,500 to $5,000, I need to be red flagging this thing and asking some questions.
Yeah, it depends. So, and this is why we always tell you guys, we tell all of our ACE peer groups and members to come to us individually, because it really depends on what's your footprint, what's your size, where are you is probably the biggest factor. And then second to that is what's your claims history like. You'll quickly find out after talking to us that we're not your agent. We are beyond that. We are niche just for this industry, just for ACE peer group members, which makes it so awesome. It really varies by case, Chris, but I would tell you that the one common factor is your price per vehicle is going to continue to go up, and you have to safeguard it. How? That's where we come in.
Yeah. So just to reiterate an answer, Chris, I mean, I think that going back to your original point, insurance is a line item cost. And as Chase said, it's a percentage line item cost, which means it's not like your office space. You buy 10,000 square feet of office space and you can grow from 5 million rev to 10 million rev to 20 million rev, maybe with that same 10,000 square feet of office space. Your insurance cost is going to increase with your revenue and your exposure. And as you take on more people and run more trucks, things are going to happen, right? So insurance is directly correlated with your growth. And then to just reiterate on what Chase is saying, that the trend right now has been seeing the auto insurance become the problem. I remember 20 years ago, the 70% expense was workers' comp. And that line item has gone down significantly while the auto has gone up. Insurance is never stagnant. And so the environment, the legal environment is always changing. Right now, we need to be aware and protect for that what we know is on the uptick and what we know is a big exposure legally. But we also don't want to completely ignore the other elements of the program, because at some point that cycle will shift and legal controls will come into place and auto premiums will go down and workers' comp will shoot back up. So multi-pronged approach.
So what I hear from that is, as a business owner in the landscape industry, I've got to protect my assets. I've got to protect my organization. I've got to protect my people. I need to make sure I have insurance coverage that does that. But I also have to understand, as a percentage of revenue, what I can do to help manage these numbers needs to be looked at on a regular basis to drive profitability in my organization. And so I know that's something you guys focus on. What are some of the common mistakes that you see landscape companies, landscape business owners in the service side of things? What are you seeing as you guys are evaluating some of these portfolios that people are making on a regular basis that they're not seeing or they're not thinking about?
Yeah, the biggest mistake is, I'll be honest, it's a stale relationship with your current agency where the agent looks at you guys as an annual renewal and their service team may answer questions when they come up. But as all of you know this, we're all growing. Operations change, the climate changes, every part of your business is changing. So if you don't have an agent that knows the industry, that's actually adapting and helping you with, what to look out for as you go from 3 million to 5 million to 10 million, I can tell you right now, more than half of our ACE peer groups, their current agents can't say what size company these ACE peer groups are. You ask me, I can quickly tell you how many vehicles and employees you have. I'm going to tell you within about $1 to $2 million reference point of what you are and what you need.
Yeah.
So it gets very specific. And with that too, if you look at, Chris, I give this example all the time. This is how, when we got into this, I knew it would be takeoff because we were the guinea pigs. We're in Georgia, right? We're based out of Georgia. Georgia, Florida, Louisiana, and Texas are your 4 worst states in the country for insurance. Georgia started this whole mishap in about 2018, 2019. So we saw it just get awful. All right. And I watched F-250s and Isuzu MPRs and all of our landscape trucks go from $800 a unit to $2,500 a unit to $5,000 a unit. I watched guys with fleets of 50 go from paying 40 grand for that fleet to all of a sudden, do the math, you're at $4,000 a truck. What are we at, 200,000?
Yeah, easily.
That's
And literally
big amount of work that you have to sell on the top line to get the profit to pay for that difference.
Yeah, and so most of our ACE peer group members, our business owners, they don't. The common question to me and Cal is, what's causing this? We didn't take an hour to break it down into fully what's happening. I could tell you in a brief answer. You've got basically, I go in my truck every day, and instead of seeing the song title on XM radio, it tells me call 188 John personal injury, right? The lawsuits nowadays, the ambulance chasers, the billboards, the marketing for litigation, it's blown up everything. So your old settlements that were 7 to 12 grand for when your employee bumped into Mr. and Mrs. Williams, that 8 grand now is 80. It's literally 80. We used to see $1 million claim a year. Now you're likely to see 5 to 10. So it's just gotten out of control per state. That's most people don't understand that, and that's where the insurance market has to react. And obviously, you guys keep getting these bumps, and you're wondering what's going on. So us bringing the consulting side plus the program, and by program, it's all these carriers again that see you as the top 1%. You're actually beyond the top 1%. So to most insurance companies, they see you now as this unaffiliated company that does not belong to anything. They don't know if you're just John in a trailer or if you're part of an ACE peer group that's bettering themselves, that's a best-in-class account. So when you fit into the program, all of a sudden you get rates that reflect that, and that's where we're making a difference.
So hearing that, as you think through like 26, 27, what's coming down the pipe, what do I need to be on the lookout for? What are the risks that, like, man, if I had to go look at my portfolio today where I've got questions that I want to get answered, like, what would you say are those top things that I'm like, man, Chris, these are where you need to look first, and these are the questions you need to be asking to make sure you're set up for success in 26 and 27?
It probably depends a lot on the state you're in particular, but and some of those flags are going to be the normal thing. What is the experience mod on your workers' comp? Is it over 1 or is it under 1? Is it credit or debit? What does your fleet safety program look like? Can somebody, either the owner or whoever's in charge of fleet safety, if you were to go to them and you were to ask, all right, what do you allow a driver to have as far as convictions? What kind of telematics system do you have? How often are you having safety meetings with these trucks? That if you can't readily answer that question, those are the questions an attorney is going to be asking you in a deposition. So you need to stand in front of that and get ahead of it so that you're not being reactive to those things. If you're in one of the states that has yet to be majorly affected, if you're in a state that's affected and you don't have that, then you need to get on it immediately. So there's a few obvious red flags that you can just walk around and ask the people that are supposed to be in charge and get a feel for, do we have a plan for this or not?
Yeah.
And Chris, to piggyback off that, I would tell anybody and everybody, if I'm a business owner especially, that you have to be cognizant that, what's today's date? 16th?
Yeah, 16.
If you have a claim today on your auto, on your fleet, it will stick with you until January 16th of 2031. It is literally stamped. Us as agents, when we go to market you and analyze your account and try to fit you into our program, that sticks for 5 years. So it's literally that harsh.
Yeah. And I know over the course of my career, I've had to submit a lot of proposals where they ask about my EMR rating. They ask about my mod rating. They ask about, the sureties want to know my bondability and my capabilities to produce, bonding capacities for these projects. And all of these little things, while they seem little and insignificant, become large factors when you're looking at large scale commercial sales, or you're looking for large scale development projects where they want to know, are you truly running a safe operation? I can give you all the presentations in the world, but at the end of the day, there's metrics that back up these details. There's things that they're going to look at and they're going to ask questions about that you have to be able to produce. And I know we've had a lot of stories of people who've had incidences or accidents and things along the way. And it's how do you document? What do you do? And how do I train my team members? I'd love if you could maybe share a couple stories, or of maybe, without naming names, walk us through a story of where somebody has maybe run into this situation in the past. And how do I handle this as an owner, or as a director of maintenance or director of installation in those scenarios?
Great question. So, of our group, that's very different per account. I would say 30 to 40% are heavily invested in the commercial sector, where they're required to have certain metrics to get into contracts. So, specifically, one account in mind, their mod had gotten up to about a 1.5. Most of your commercial contracts you get into will ask you to have a 1.35. If it's not a 1.35, you better have a good agency that can explain what created the mod, what the trend is like, good explanations, and you can actually work around stuff like that. So how do you combat a high mod where you're not getting commercial contracts? First, and I think Cal would agree with this, is a return to work program, AKA a light duty return to work offering for injured employees. In the landscape field, I know most of you business owners are like, that's difficult. When John injures an ankle and he's out for 6 months and he milks the carrier for 30 grand, including PT and then potential settlement, if you bring him back and you show that, hey, we've got a climate here at XYZ Landscape, you're going to do office detail, you're going to shadow Justin while he's driving and leading this crew, whatever, that return to work program is what keeps these claims down, get your mod in turn to make a big reverse on what it's doing. And there's actually a lot more that goes into the mod that impacts what you do, but return to work program is my number one that everyone should have, that I would say probably a third of you have currently.
Yeah, I think understanding a mod is something that most people don't take the time to truly understand it. It's a complicated program that goes into a rather simple math formula.
Yeah.
And it varies by state and it changes every year. And so if you're not on top of that process, understanding how the math formula is changing, you don't know how it's going to impact you. You can have a year with the same exposures, the same losses, the formula changes, and your mod goes from a 0.98 to a 1.05 through nothing you did. So being aware of it and being able to have conversations with your insurance broker, your agent, about what it's doing and why, very important.
Yeah. So
yeah, and the mod makes up a pretty big difference, Chris. If you've got, let's say, 2 million payroll, having a credit mod of a 0.8 versus a debit mod of a 1.2 is the difference in typically 10 to 15 grand, just by having good controls. So it is
to make this easy, because like I said, I'm a green industry professional. I have a bachelor's of science in horticulture. I'm not a math guy. And I know this is important to me. And these numbers mean a great deal to me running an organization and being successful, getting to the next level. How can you at Sage help me manage these mod ratings? How can you help me be better at these? How can you make me track these in a better way? What is it you guys can help with on your side that help us be more successful as landscape professionals to make sure that we can do these things?
If you're specifically looking at the mod, the first thing you need to do is run an analysis, and we'll run a complete analysis on it. And we'll tell you, I tell people a 1.0 on a mod is average. That's getting a C on the test. And so if you think you've got a 1.0 and you're doing well, or a 0.98 and you're doing well, you are the absolute average. And so the first question is, what is an A+? We don't even know what target we're shooting for. And so until you do a mod analysis, you don't know what your minimum possible mod is. So we start by identifying, all right, what is that minimum possible mod? Where are you today? Let's look at every single claim and what's driving each of those mod points. And then from there, if this claim was handled differently and we could use the current rules in our favor, what would your mod today be if we'd handled those claims differently. And we can project how we're going to handle them in the future. Unfortunately, it's very hard to change the past. We've had some instances where we found mismanagement on the claims side and we've been able to change things retroactively, but that's very difficult. Usually it's going to take 3 years to change a mod and where it currently is. So it's a long process. It's got to be intentional on your side. And really, you just need advice from somebody who understands it. If you call your broker and they can't tell you what your minimum possible mod is, which is probably one of the simplest math formulas to run ever, then you already, that should be a red flag that you don't have somebody truly advise you.
And Chris, I'll say that again, it just highlights what goes into what we come across. Probably in 90% of our cases, even for $10 to $20 million companies that are spending upwards of $300,000 a year on insurance, it's that stale of an industry we're in.
Yeah. I know you guys do a lot of this evaluation stuff, and we see this all the time with our ACE peers, where you guys take the data, you're looking at these people's portfolios, you're looking at their exposure, you're identifying challenges that we see. And often cases, you're not always taking that portfolio on for those clients. And often cases, you're going back to them and saying, hey, you look good, man. All I see is 1 to 2 things, and you make these quick adjustments. And I think you're in a good position and place to be successful. I'd love if you'd share, what's a couple examples you've seen where you guys have been able to hey, man, red flag. This is something I see. We've got to get this covered. And I can think of one person in particular in South Texas where it was like a 48-hour turnaround, which we don't advise anyone. But walk me through that story. What happened there?
Yeah, that particular story was an agency fault. It was your typical conglomerate agency that they're not going to pay attention to you unless you're probably 20 million plus. Bad issue. One of our aces was actually uninsured for about a little over 2 months. Very dangerous situation. Had to put coverage in place. It was like a 36-hour turnaround. It was one of the fastest we've done with savings of 30 grand. So that was exciting for him. But again, it just points towards who's your agency? Are they really helping you? Do you look at this as it's insurance, I don't want to mess with it? Or do you look at it as, hey, I've got a group right here ready to help us out. Let's evaluate what we're doing. And then my other thing, Chris, that I would tell you that you brought up, and I'm glad you brought it up, is what's the trend right now? Legacy rates. A lot of you have heard me talk about this. Legacy rates. All right. Where you're at currently, I don't care if you're 2.5 million, 5 million, 20 million. Most of you have been with the same carrier for your auto for 3 to 5 years. Follow me on this. If you went to that same carrier today with your account and they hadn't met you before, your rates would go up by 40 to 60%. Insurance carriers, when they're writing new business, the rates are actually trending very high. Renewal rates are staying low. And so my point is you protect your renewal rates, which we term as legacy rates, because you got them back in 2022, 2023. And I'm over here preaching to put auto controls in place and keep claims off so that your 10% increases are actually very good. And that's where I constantly tell you guys, hey, I can't help you at the moment, but you do need to go to your agent and address these 3 items. But I can't help you from a savings standpoint just yet. Legacy rates is the one thing I would tell you all to keep in mind. Over the next 3 to 5 years, you will see your carriers quickly shift towards either, hey, you're not in our appetite anymore, or we want to give you 20 to 30% increases, where I would tell you, please come to see us and talk to us.
Yeah. I love that you brought that up. And another story that kind of comes to mind, and Cal, Chase, I'd love if you share a little about this. A lot of our listeners today work with subcontractors, right? Like they've got subcontractors doing concrete or masonry or pools or anything like that doesn't fall under a W-2 employee. But to do that, there's insurance that has to factor in on this. Hey, they're on your job sites. They're working with your clients. There's exposure there still for me as the providing company of record. And I'd love if you could share, what are some things I need to be thinking about if I'm running subcontractors in some capacity to get my work completed that are super valuable to me to make sure that I'm still protected as an organization and that subcontractor is protected?
I would say the most important thing to realize is that when you have a project that you bring a subcontractor in on, the contract is with you. Chris, you go to sell that project and you have to hire a concrete sub. The project owner knows that they contracted with you directly, not with the subcontractor. And then the next thing we usually run into is, oh, we've been using the same concrete guy for the last 10 years. We're friends. Nothing would ever go wrong. And the problem is when something does go wrong, first of all, at $1 million, nobody's friends. Secondly, the insurance company doesn't care what your relationship is with those subcontractors. You are distinct entities as seen under the policy and legally. And so unless there's some sort of agreement governing that relationship, the insurance companies are going to act in the way they would in a normal tort situation. So what you want to do is make sure that you've got proper contracts in place with those subcontractors so that it clearly dictates this is how we expect you to respond when something goes wrong. This is the insurance that we expect you to have to make good on the promise you've made to us. And here's our review process for letting you on the job site. And that all has to be done before you set foot on the job site. Because once you set foot on the job site and something happens, nobody's going to sign documents and problems are going to get real ugly after that. And you're protecting your insurability if it was something that the subcontractor did that you had no control over.
Yeah, and Chris, that's a hot topic. Currently, right now, it's noon on Friday, and I had 2 meetings this morning specifically talking about subcontracted work. A lot of our ACE groups are actually shifting towards stabilizing their payroll and actually adding in more subcontracted work because it's a nice little add-on, right? Deal with less people in-house and actually grow in other sectors. It's very cool. There are certain things that you guys have to do that I would say probably half of you are already on board with, and that's usually 10 million and up companies. And the big ones are, just like Cal said, risk transfer. So that's a combination of who at your office is the person in charge of collecting certificates and getting a sub agreement signed. A lot of you now are utilizing AI. You're probably redoing your sub agreements. We've got one that's probably top 3 in the country. If you wanted a sample of ours, we're happy to give it. But yeah, those 2 things, and they can be broken down into much further detail, but COIs and sub agreements and having a good plan in place. Hey, W9 COI sub agreement, that is a typical best practice when it comes to subcontractors.
I would love, since we're down that path, I'd love if you guys would address this question as well, because I get this a lot. I've got a subcontractor. He doesn't own a skid steer. I do. He's using it. What are my risks when that happens?
Yeah, so you let somebody borrow it. Of course, there's risk in a lot of different ways, right? If he causes damage to the property you're working on with a skid steer, or he hurts somebody that's a third party on the job site for some reason, his liability, assuming that it's in place and assuming you have a good downstream risk transfer contract, would trigger. If he damages the equipment, now you've got a problem, right? Because you didn't damage the equipment. You leased it to someone else or lent it to someone else, and does your insurance cover that? If the equipment hurts him, you didn't properly maintain the hydraulics in it or something, overheats and it catches on fire, and now he gets hurt. He's going to sue you because of the maintenance of the equipment. So there's lots of different ways that can play out, and without a proper contract in place that essentially holds you harmless, many of those things could blow back on you as the person who lent the piece of equipment.
Yep. Nope. I love that. All right. So I know we're trying to hit a lot of just hot button topics, things I hear a lot. If I'm a landscape business owner right now, I've got a 2026 renewal coming up. Chase, I know you've educated me a lot on this because like typical, I know what we see is people just wait until it's time to renew. And then what happens, just like renewing our maintenance contract, right? We do it right when the customer expects it. And that sometimes isn't the best solution, right? So if I want to be strategic and make sure that I am asking the right questions and driving the best opportunity for me to be successful in my renewal and do what I need to get better coverage and watch my costs, what are those things I need to be thinking, Chase and Cal, to make sure that I'm set up for renewal and that I'm being proactive in how I'm doing it to make sure that I'm in the best position to be successful?
Yeah, great question. My answer would be if I'm an ACE peer group member and I'm a business owner, where once before I did not belong to this group, and my only way to get a second opinion was go to another agent that's obviously going to try to sell me. Now you've literally got a resource where we are here to help you. So my first recommendation is when you're out of renewal season, if your renewals it just passed in December, man, it is a good time now to have us review everything. Because again, we're not here to try to sell you and tell you, hey, you need to make these changes and switch to us. It's going to be do this with your agency, change this, let's meet down the road. But right now you need to fix X, Y, and Z. So you guys literally having a resource at your fingertips, us, man, it's never a bad time to visit your insurance, whether you just renewed in December or if it is coming up in March, and it is the good time right now to allow us to come in and obviously compete against your current agency.
Yeah. And so just for the novice in me, I'm not an insurance expert. I don't pretend to be. I've learned to just come to you guys when I have questions, ask questions. I get better responses, no different than me trying to sell a landscape to a customer. I'm here to educate my customer in ways to show them why my value means something. Getting good questions from you guys allows me to educate myself so that I can go back with more educated questions of my current provider and find out, like, am I currently in the best situation to be successful? Are there opportunities that I can do something different? Am I fully covered? Am I not fully covered? What are my risks that I need to be considering? All these things are good conversations to be having in that relationship that you have with your providers.
Yeah, see, that's what's so cool about this industry for us with you guys is that every landscape company is different. Some of you have 10 different classification codes on your workers' comp and your general liability that drive premiums, and we can see audits and what's going on and what history looks like. Others of you are just lawn care, landscape, and irrigation. I mean, there's complex, there's simple, but downstream, you are probably with an agent that does not understand landscape. And so when we look at it, we're putting different eyes on it. Again, for you to make a good business decision to see what's going on with your insurance policies, use someone that's in the field that knows what they're doing.
Yeah.
That'd be my advice.
I'd love to know, what am I not asking? What are those things that maybe they didn't come up in our topics? They weren't questions that I was thinking of, or maybe that we had covered today. Is there anything that we need to make sure that I want to make sure that, man, this is something I do want to make sure that you guys hear as a landscape green industry professional, so you're set up for 2026?
Yeah, Cal, I'm going to give two things, and if you give a couple,
Sure.
my two would be, and I preach this constantly, if you don't already have GPS and telematics, of which I think 80% of our group does, because we are best in class companies, if you don't have them, man, you got to get them. Secondly, if you don't have cameras adapted with your GPS and telematics systems, I highly recommend cameras. And the question comes up, what if my guy's at fault and we got it on camera? It's a quicker open and shut door case for your attorney when you got cameras, regardless of fault. And then the big number two I would tell you guys is, this isn't a lot of us, but several of you are having your agencies shop you out every year. And some of you every other year, and you're like, hey, this is my system. And I think Cal would agree with me that we would both tell you it's not a good practice, because these carriers see your account name every year. Carriers look for loyalty, right? So they either want to place you in a program or find someone that hasn't been shopped out to them 3 times in the last 5 years. So those of you that do think it's a good idea to shop out every year, every other year, come talk to us. We'll help you be more tactful. If you love your agent, we'll give you the tactful way to go about telling him how to shop you out.
That's awesome.
Those are my two.
Cal, anything that you want to add?
I would just say the big picture response of some of the things we're talking about on the insurance side is really, what's your due diligence process and how are you selecting the vendor that you're using for this? And a lot of us that aren't in this industry, because it's a very esoteric industry, right? It's complicated. People don't really know what they're buying. And so, like, I tell people a lot of times insurance is like a parachute, and you look at it from the outside, it looks great. And hey, I bought the cheapest parachute, but when you jump out of the plane and you pull the handles, when you find out whether that parachute's properly packed or any good, right? And that's not the greatest time to find out. So going back to having us take a look at things is just, or help coach you through that renewal process. We can help you with the due diligence process. We can tell you the things you need to ask that you don't know about this industry. If I'm buying landscaping and somebody runs ruts through my yard cutting my grass one time, I can see it immediately. I see the problems, I see the failures, and I can correct for them. But this industry is hard because claims don't happen every day.
Yeah. No,
Yeah, like an example of that, Chris, would be we'll see on some of our ACES policies, they've got what we call a CG 2294, where you've got an exclusion for subcontracted work, and people don't know it, and their agents probably don't know it, and we're like, holy smokes, get this removed right away. So there's little things specific to our industry that we'll find in policies that quickly bring up to you, and we get awesome feedback, by the way. There was a company, an ACE out of New York this past summer that I saw them coded incorrectly, told them take it to their agent. Could not beat their legacy rates, but they saved about 24 grand just by having a code changed. And they were like, Chase, come up for lunch, please. I'm like, I can't make it to New York, but I'll try next year. There's just little things that we're able to put our eyes on that again, your current agent's, no diss to him, but he's probably not seeing it.
Yeah. And that's not the stuff that I'm ever going to catch looking at those things. So this is why you enlist the help of industry professionals. I'd love to quickly, you guys summarize so much of what we covered there. Just a couple more things, just quick summary. We talked about the mod ratings and the value that comes behind the mod ratings and what it goes into managing those. Cal, you mentioned, 1.0 is an average mod rating. So very quickly, you as a business owner can go look at your mod rating today and figure out, am I close to average? Am I above average? Am I below average? Okay, great. Now I know if I've got questions I need to ask. We talked about protections. We talked about ways to go about making sure that your subs are protected and your resources are protected, and what goes into making sure that you have those coverages. Chase, you talked about that one line item just a second ago in New York, where that one line item of subs being excluded actually saved them $25,000 of just being able to ask the right question and look at that. We talked about the importance of doing evaluations and looking at these things on a regular basis and making sure that as your needs change, that your policies change with it, and taking that into account every single year as we're growing and scaling our operations. You guys gave a million different great examples of how we manage by the line item. No different than why we saw the value in Sage Risk Advisors when we first decided to enlist your help and support to support our ACE network. But managing by the line item, asking good questions, this is one of those top 10 line items of business expenses that we see on P&Ls across the industry in every aspect of what we do. And that's why you have to identify the challenge and figure out, like, man, little percentage changes in this line item can make a massive difference. We covered subcontractor agreements and the importance of your certificate of insurance, asking those questions, getting those things in writing, having those policies on record so that not when things happen, but if things happen, you don't have to be afraid that, did I have coverage for this? Did I have coverage for that? No, we know we do because we have a partner that allows us to do that. Anything I missed today? Anything that I covered that we did not go through?
Yeah. The one thing I'd like to end with is, okay, where's all the fun in this, right? It's insurance. Like, where is it fun? So those of you that aren't legacy rated, yeah, we have a lot of fun. We come in, there was a recent account out of, I won't pick exactly where it is, but in Texas, they were about to spend about $350,000 on their renewal. They need quite a few things. We came in at 130. We use A+ rated carriers. It's literally all program established. There are fun things that we can do with a lot of your accounts. Now, those of you that are like, I went and saw Sage and took advantage of this, and we couldn't get savings right away. And that's where I would tell you, hey, take the benefit of getting the review that we do for you. Those 2 or 3 things are usually vital for at least setting you up for the next 2 years. And I promise you down the road will be effective.
Yep.
Yeah, there's a lot of fun, Chris, in savings. And I constantly can hear you in the background. You just saved 28 months of ACE dues. And man, we literally are doing that left and right, which is where we have a lot of fun. And so I would just tell you guys that we didn't get to help out right away. Eventually we will. It's just insurance right now is a crazy industry, and a lot of you are legacy rated in, and we're just asking you to protect your current situation so that you can stay in those legacy rates as long as possible.
Yeah. I just want to thank you guys again for coming on and spending the time with us. Like I said, I never thought I would know this much about insurance, but you guys have been such a tremendous asset and such a great partner with just helping to elevate the game of what and how we can improve the green industry from a risk advising standpoint. And so thank you both for your opportunity. Thank you for investing in the green industry and what you're doing to elevate the bar of what we're delivering. And certainly, if we can help you guys, we're going to do everything we can to help support what you're doing and your cause, your need. If we want to get in touch with you, obviously with our ACE network, our ACE Advantage partners, we know how to connect with you there. You can connect with me, you can connect with Chase. If I'm just listening to this podcast and I don't know anything about insurance and I want to connect with you, certainly we ask that you reach out to us today. We'd love to make that network happen and those connections happen so we can change the way you're doing business in your operation. So thank you both for joining us today. And I appreciate your time and spending some time walking us through all this.
Thanks, Chris.
Thanks, Chris.
Enjoyed it.
Thank you for listening to this episode of Roots of Success, brought to you by the subject matter experts at McFarland Stanford. Have a question you want our coaches to tackle in a future episode? You could submit that at mcfarlandstanford.com/podcast. And to find more helpful content from McFarland Stanford, follow us on X, LinkedIn, Instagram, and Facebook. If this or any of our episodes have piqued your interest in ACE peer groups, we encourage you to join us at ACE Discovery. Just check out the events tab at mcfarlandstanford.com. This is Jason New, co-founder and principal at McFarland Stanford. We'll see you next time.